Good morning, everyone. This is Jason Winger of CFRA. Pleased to be joining everybody this morning. Very quickly, for those who aren't familiar with CFRA, we are an independent research provider firm. And basically our goal is to be the most trusted global independent investment research provider. We provide independent and actionable research and analytics to our global subscribers to both improve their investment and business decisions. This morning, I've got Sam Stovall on the line with us. Sam is the Chief Investment Officer at CFRA. He serves as an analyst, publisher, and communicator of CFRA's outlooks for the economy, market, and sectors. Sam also is the chairman of the CFRA Investment Policy Committee, where he focuses on market history and valuations, as well as industry momentum strategies. Sam is the author of several financial books and has been in this industry and in this business since 1989. Along with Sam today, we also have PeakCapital Management. PeakCapital Management is a registered investment advisor based in Colorado that develops portfolio strategies for their client base. What we're going to discuss today is Sam is going to introduce himself and CFRA and walk through the model portfolios that CFRA produces, and then discuss how that works with some of the efforts that Peak is doing to utilize those model portfolios to develop investment strategies that advisor communities could be interested in. So without further ado, I will turn it over to Sam.
Well, thank you, Jason, and hello, everybody. Thanks for tuning in. Let's take a look at the first slide so you get an idea as to what we're going to be referencing today. So my agenda for today is basically to explain what is CFRA. Jason gave you a very quick understanding of our being an independent equity research provider, but we are a lot more than that. So I want to share with you some of those things. Probably most important is, why should you be listening to us? Why are you on this call, and why should you remain on this call to learn about the portfolios that we have developed? Third, I want to talk about our track record for superior stock picking and how that has been able to translate itself into market-beating portfolios that we have been offering to clients anywhere from 9 to 23 years. I want to quickly go through the portfolio management committee, because besides having a plethora of stocks to choose, we want to make sure that we are cherry picking the best recommendation ideas that then go into these different portfolios. And then lastly, I want to review the 4 portfolios that are offered by CFRA through PeakCapital and available to advisors on the web today. So with the first slide, let's take a look about basically explaining who is CFRA. CFRA basically is a equity research firm. We blend our fundamental equity and forensic accounting research techniques together. This graphic gives you sort of an idea of the top-down approach that we offer in terms of general market commentary that is offered daily as well as weekly, sector insights, portfolio guidance. We also offer robust analytical coverage of 11 sectors and 68 industries. And within that, based on a lot of the recommendations that we make on individual company bases, we offer unique holdings-based analysis coverage on 1,860 plus ETFs, as well as more than 15,000 mutual funds. On a qualitative basis, individual analyst research basis, we cover 1,500 global companies. And through our quantitative approach, we cover an additional 25,000 global companies. Obviously, diagnostic industry and company monitoring for risk assessment, and then investigative insights utilizing our forensic accounting, legal, and exception-based insights. So all of these factors together come up with recommendations that we make on individual stocks around the globe. So how have we done? As the former mayor of New York City, Ed Koch, used to always ask, how am I doing? Well, the next slide will show you how we have been doing. So why should you listen to CFRA? Proven performance. Investors is an independent ranking firm that evaluates the stock picking capabilities of companies on Wall Street that offer coverage of more than 900 stocks. This is a recent ranking showing CFRA research as #1 on top of many of these venerable Wall Street names, showing from a buy and sell perspective what our recommendations have done. So being just even in the top 10 would be an impressive accomplishment, but recently being the #1 company, not ranked by ourselves, but ranked by an independent investor service, makes us feel pretty proud that the research that we are doing is adding an awful lot of value to our clients. In the next slide, we're talking about CFRA model portfolios. Obviously, they're designed to help the investment professionals develop new investment ideas for their clients. These are time-tested methodologies, proven performances, analytical expertise, based on our own proprietary qualitative and quantitative ranking systems. As I mentioned earlier, the track record ranges anywhere from 9 to 23 years. I remember introducing my industry momentum portfolio back in 1999. Many of the CFRA portfolios have outperformed the market over both the short and the long term. So not only how have we done with individual stock recommendations, but now we have been able to leverage those good picks by identifying the portfolios, the groupings of stocks that over time have outperformed the market as well. By how much? Well, let's take a look at the next slide. These are model portfolio performances. These are 3-year compound annual growth rates for the CFRA portfolios, as well as the S&P 500 equal weight index. Now, some of the portfolios are global in nature, some are small and mid-cap in nature, so not all of them would be applicably based toward the equal weight 500, but still, you can see that many of these portfolios have significantly outperformed the benchmark over the past 3 years. Most impressive intrinsic value portfolio, CAGR of 15.4% over the last 3 years through the end of June. Industry momentum portfolio, 10.5% CAGR over the last 3 years. High quality capital appreciation up 7%. The reason that I highlighted these three is that these portfolios are being replicated in portfolios that are offered by CFRA and PeakCapital. So getting an idea of the kind of historical performance that these portfolios have allowed over the past 3 years, but also when pulled up from our Market Scope Advisor platform, we actually also have 5-year, 10-year, and since inception performances, many of which also have significantly outperformed the market. But what about the committee? What about the people themselves who have been involved in stock selections for the different portfolios? Let's take a look at the next slide, and we can actually see our portfolio committee 12-member team uses a top-down and a bottom-up investment process. The team members average 17+ years of experience in investment management. Earlier, we had a slide that showed on a cumulative basis more than 200 years of experience, but I guess that was a little bit hard to fathom, thinking that, gosh, you know, maybe we knew Ben Franklin when we started this investment outlook. But average tenure of 17+ years per person is a good way of describing the experience that our committee members have. There are 4 portfolio managers, each of whom is supported by a co-portfolio manager. And members are from both the forensic and the fundamental equity research teams. So going top down in terms of economic macro down to individual stock recommendations. The team regularly meets with me and we talk about the broader 10,000 look in terms of the economy, in terms of the stock market, in terms of sectors, etc. And then each investment working its way down gets a forensic accounting analysis to ensure that there are no red flags. So both teams work with each other, the fundamental equity research and the forensic team, to ensure that we are doing our due diligence to make sure that there are no unnoticed red flags that could become a problem later on. Very simply, we offer 4 portfolios for investment advisors to use with their clients. As we take a look at the next slide, the descriptions are, first off, the intrinsic value. If Ben Graham had a computer, how would he use it? And that, in a sense, is what we do with the intrinsic value, using fundamental research, the traditional quality type of research that was professed by Ben Graham decades ago. The portfolio is based on a screen of 5 investment criteria: free cash flow of at least $250 million per company, net profit margins of at least 15%, return on equity of 15% or more for each of the past 3 years, as well as the most recent quarter. $1 worth of retained earnings, creating at least $1 worth of shareholder value over each of the last 5 years, and ample liquidity. We also make sure that these are investable stocks, so only those with a market cap of at least 500 million can be considered for entry into this portfolio. So intrinsic value essentially is traditional, fundamentally approach. Second is looking at quality. How does CFRA define quality? Consistency. What is the consistency with which a company has raised its earnings and dividends over the last 10 years? Many of you might be familiar with this kind of a quality or consistency ranking offered by S&P Global. Their market intelligence quality ranking shows A-, A, or A+. These are companies with superior or above average frequencies of raising earnings and dividends in each of the last 10 years. B+ is average, B, B-, and C are below average. We only select those stocks that are above average. We then match them up with our CFRA equity research 4- and 5-star rankings. A 5-star is a strong buy, 4-star is a buy, 3 is a hold, 2 is a sell, and 1 is a strong sell. So only buy and strong buy companies with quality rankings of A- or better are considered. Currently, there are 66 companies in the S&P 500 that match both of those criteria. However, the high quality capital appreciation portfolio consists of 15 stocks. So these stocks are cherry picked by the CFRA portfolio management team. Next, we have the industry momentum portfolio based on the industry ETFs offered by State Street. The old adage is, let your winners ride, but cut your losers short. So what this portfolio does is basically approach investment portfolio population through momentum. It equally weights 5 of the S&P 500 sub-industry ETFs with the strongest trailing price returns. Then this list is reevaluated and rebalanced monthly. So basically at the end of each month, you look back 11 months and say which ETFs have had the strongest 11-month returns. Those with the top 5 are in the portfolio equally weighted and then held until the end of the month. And at that point, every month end, you look at all of the sector sub-industry ETFs, look back at their 11-month price returns, and then ensure that at the beginning of each month, you are owning those 5 that have the strongest trailing relative performance. Lastly, Nervous Nelly. This strategy is an attempt to encourage nervous investors to participate in the investment process by allocating among low volatility subsets of global equity benchmarks that have historically delivered higher long-term returns with lower fluctuations in annual performances. So looking at the S&P 500 low volatility ETF, the mid-cap 400 low volatility ETF, small cap 600 developed international and emerging market low volatility ETFs, building a global equity portfolio that instead of having the broad benchmarks, you are taking out the low volatility subsets and investing only in those which over the long term have exceeded the market by a substantial amount with substantially reduced overall volatility. So in a sense, allowing investors over the long haul to be able to sleep better at night. So let's take a look at how these portfolios have done. The portfolios have posted returns here month to date, quarter to date, year to date through the end of June of 2020. The reason we are looking at June is because that's how long that they have been active. Month to date, S&P 500 equal weight index was up about 1.6%, intrinsic value up 2.6%, high quality capital appreciation down about 2%, industry momentum up 3.5%. In terms of the custom global equity benchmark, up 2.9%, the nervous Nelly basically treading water month to date. Looking at the quarter to date returns and the year to date returns, essentially 2 of the 4 portfolios have been exceeding their benchmarks, which for those that have been underperforming really is atypical compared with their longer term track record. I think many people would agree that we are in a bizarro portfolio environment because of the markets being in a reverse mode in terms of traditional seasonality. Seasonally, the market does very poorly. May through October does very well, November through April. But because of the COVID-19 crisis around the globe, it basically has turned the market into a topsy-turvy environment where we experienced a 20% decline in the first quarter, followed by a 20% advance in the second quarter. And with the upcoming presidential election, an awful lot of uncertainty is likely to ensue. So with that, let me just go to our disclosure slide to tell you where you can find more information from CFRA research. If you want to find out more information about these different portfolios, about Market Scope Advisor, please reach out by emailing cservices@cfraresearch.com or by dialing our 800 number, 1-800-220-0502. So with that, why don't I now turn it over to Jeff Eliason, who can give you a quick update on Peak Capital Management.
Thanks, Sam. I appreciate your insight and expertise. As Jason mentioned at the beginning of the call, PeakCapital is a Denver-based registered investment advisor and asset manager with clients across the globe, serving financial professionals through separate accounts and research, focusing on individual stocks and ETFs. We're so thankful for Sam and CFRA's expertise and insight, particularly during this difficult period, as Sam mentioned. We've been doing meetings alongside Sam for about a decade now, and one question that comes up after every single presentation with Sam and CFRA is the advisor asks, how do we access your best ideas? Peak Capital Management does just that for financial professionals and their clients. Peak offers Sam and CFRA's best thinking through separate accounts available at Schwab, Fidelity, TD, Interactive Brokers, E-Trade, Morgan Stanley, Adhesion, Orion, Sawtooth, and Folio. So as you can tell, pretty much anywhere you can access separate accounts or unified managed accounts, Peak Capital and CFRA is there to serve you and the clients that you work with. To learn more on how to access Sam and CFRA's best thinking through the 4 strategies that Sam outlined, please email me at info@pcmstrategies.com. Again, info@pcmstrategies.com. Since March, and most recently, in the meetings that we've had with advisors, the one word that keeps coming up is uncertainty. Sam, we're so grateful that both you and CFRA are able to give us and the advisor community guidance and clarity through these unique and particularly difficult times. We look forward to being in close contact as this story continues to unfold throughout the rest of the year, and really being of service to the financial advisor community across the country. Again, thank you for your time, and we look forward to circling back and hearing more from you and the team at CFRA in the coming weeks. Bye for now.